How is risk management involved in finance?
Management, in fact, the broader term nowadays being used is called ERM, which is Enterprise Risk Management. But now, ERM as a concept, of course, envelopes the entire company and is not just limited to finance function. But if you talk only about finance function and risk management, now basically, you could have 4 or 5 types of risk, major if I was to say. If you are doing a lot of import or export, or if you are borrowing a lot of foreign currency for expansion, then you may have what's called foreign currency rate movement risk. If you have a lot of surplus money and you decide to invest in either equity or in mutual funds for debt or money market instruments, then you have an interest rate risk because value can change. In finance, you can also have what's called reporting risks, which means that in your reports to the shareholder, when you are declaring your quarterly result, half-yearly result, you could have risk that financial processes are not strong, and therefore wrong figures may get reported, which can later on hurt the company. It can hurt investor sentiment and things like that. So what happens if I was to look at finance function as one? So then one will have to develop strategies in saying how should we manage the forex risks, for example, how much we should protect ourselves, what kind of instruments, should we take forward contracts, should we use options, or what is called derivatives, financial derivatives should we use, what is the risk if interest rate move to the other side, and that kind of stuff. Similarly, if we are looking at investment risk, because we have a lot of money we are invested and we want to know how can we minimize the risk, what type of mutual funds we should have. For example, to give you an illustration, when Alpha Y used to invest in mutual fund, it has certain criteria that were built in. Number one, that it should be a AAA rated fund, that not more than X percentage of our funds will go to a particular fund, and within that fund not more than X percentage will go to individual schemes. Similarly, we look at what's called concentration ratio, how many, what of the total corpus, is it that 5 companies contribute to 85% of the corpus, because then we are at a much more risk compared to a highly diversified mutual fund. So similarly, in financial processes, then we think that whether my IT systems are good, whether they are robust, I've got good access control, people can't tamper with figures. In critical areas, I have a maker and a checker concept. So all these things basically go into financial risk management.